What's up, guys? Welcome back to DCA. So no matter how well you've done in the market cycle, I think one of the things that makes a great investor is someone who can step back and ask themselves, what could they have done better? So what I'm going to be doing personally going forward is thinking about ways to value networks. I'm also going to be thinking about what networks in what niches of this crypto market are going to be valuable going forward. But a good starting place is to talk about layer ones. And when we think about layer ones, I think the premier layer one, once you move past Bitcoin, but not a lot of things are actually built on Bitcoin. So we'd be talking about Ethereum. So what we're going to do, and I'm going to start a series on this actually, is looking at valuing networks and how do we value these networks. And so we're going to look at different metrics that can help us to determine how we can continue to do that going forward. So we're going to be doing it for multiple reasons. First, we want to know what makes a network valuable. Okay, so we're going to look at a series of metrics that will help us understand that. Second of all, we want to apply that not only to the future, but we want to apply it to what's going on right now. So in our analysis that we'll be doing, we'll be thinking about the markets going forward, and we'll be thinking about the market as it is right now. So we can apply anything that we do both to the future and to the current time, which we'll be doing. What we're going to do today is simply start with Ethereum, and we're going to start with the foundation of sort of how a network is valued. Okay, so what we have here is the Ethereum market cap divided by daily transactions. So on the y-axis, on this primary y-axis, it's just the market cap. So as we go higher, as any point is higher, that indicates that the market cap for Ethereum is higher. On the x-axis, we have the number of daily transactions. So more transactions to the right, higher market cap in the upward direction. Then the color indicates the day. So we're starting from the first day that Ethereum hit exchanges in blue, and then you can just follow the color along to the deepest red color, and that would indicate where today is. So that's just showing us right here. And you can see it sort of shows us the flow of a market cycle. So we have relatively lower market cap, lower transactions down here. Then you can see the market cycle progresses. You notice that the daily transactions increases before the market cap does. Okay, so the market cap is staying relatively the same while we're progressing in days, and the daily transactions is moving to the right. So as we see, the daily transactions increases, and then finally, as we start moving up, the market cap starts to increase. Then as we move into the lighter blue colors, you'll notice that there was a drop in daily transactions, okay? So what we're looking at here, when you see these values way over here, these dark blue values, what does that indicate to us then? So we have a very high market cap, very high transactions, and obviously the value of Ethereum would be higher during this time. So this is indicating this was a market cycle peak. So we just sort of moved up and to the right as the transactions increased. So transactions can be thought of as anything from people sending funds to, using apps, anything like that, anything that uses Ethereum. And ultimately, that's what drives value in Ethereum, is the use of the Ethereum token. You need to use the Ethereum token, otherwise it would have no value. If no one wanted to use it, because it's a use case token, not like Bitcoin per se, which is you can think of as a store of value token, its use is ultimately going to be driving its demand. So when we see this moving to the right, that's indicating to us increased use. So then we move into this light blue into green. Okay, and what is that indicating to us? Our transactions are now dropping. So the days are progressing, our transactions are dropping, but then it sort of turns around down here at a very low market cap. So notice our market cap is all the way down here at around 10 to the 10. So in other words, that's around $10 billion. Okay, 10 to the 11 is $100 billion, $200 billion, $300 billion, $400 billion. Each check represents a new tier of 100 billion. So notice up here, our highest market cap, in fact, we can just take a look. So our highest market cap was nearly $600 billion. Okay, so that's that's going to be your peak price for Ethereum. All right. So we came down, very low transactions, very low market cap, barely a market cap of $10 billion. And this is going to be your bear market. So when we're all the way down here, we're in a bear market. But notice again, what happens from there? Okay. The transactions begin to pick up before the market cap is actually picking up very much. So our transactions are picking up, and then it goes parabolic. And that's going to be your 2020 into your 2021 market cycle. So we moved all the way up to nearly $600 billion. And now the transactions have been falling, as noted by we're moving to the left as we move into the deeper red. And therefore, the market cap is falling. So we're seeing here a very close relationship between the number of transactions performed and the value or the market cap of Ethereum. So here you're seeing something very similar. And so we won't spend a bunch of time on this, but this is the same thing, except now we're looking at the Ethereum market cap, again, on this y-axis, divided by the Ethereum daily active users. You're seeing a direct correlation between the market cap here on the y-axis and the number of daily active users. So as the users increase, we move up and to the right. So this is our bull market peak right here in January of 2018. We run into the bear market and you'll see it just plummets. So we're sitting right here, and then in less than 100 days, we're down here into this, much lower level. So we go from a market cap of around $100 billion all the way down to, we basically brush with $10 billion. So the market just plummets for Ethereum, and that's in the prior market cycle. Then we come down, the active users. So as we're moving to the left, the active users is decreasing. So we get down to less than 200,000 daily active users. And then the market cycle sort of bottoms out. So it's just like people say, when everyone becomes bearish, that's when the market is ready to make a recovery. So you see, it just gets to extraordinarily low levels in terms of how many people are using the network. So we're all the way down here, and then the market turns around. So we go from 200,000 active users, or under 200,000, and then we start to move to the right, and then 400. So we're moving all the way up 500. And then we finally nearly get to 1 million active users. Notice we did not quite get there this market cycle. So we only got to about 800 or 900,000 active addresses. Then the market, we cap out at nearly $5,000 in November, and we sort of head the other direction. And that's where we're sitting right now. We're sitting in this darker orange range, but notice the active users from its peak over here has significantly fallen. So that's kind of what we're going to be looking at today. So the last thing I wanted to show you is just how tightly those two metrics are correlated. So on the y-axis now is daily transactions, and on the x-axis is active addresses. And as you would expect, as your active addresses increases, your daily transactions increase. So you can see these two metrics are just extraordinarily correlated. So you can see that if we just draw this, and I'll make this a bit wider here, you could see that if we drew a trend line through this, it's very highly correlated. The more active addresses you have, the more transactions you have, and therefore the more value the network has. Okay, guys, so what we're looking at here is the Ethereum market cap, the Ethereum active addresses in yellow, and the Ethereum transactions in blue. And just on the x-axis is a normal date now. So what we're going to do is look at how this relates to the way that Ethereum is valued, similar to what we just showed on the three-dimensional chart. Then we're going to see how it's affecting the price at the moment. So you can see over here on the right in this purple, on this purple y-axis here. So we have multiple y-axes here for each of these charts. We are sitting at 352 billion. Our max is up here at around 500 and right around 550 billion. You can see back in 2018, our peak was up here at 120 billion. Okay. Notice what happened though. You had a large number of users. Okay. So we hit a peak in active addresses. So our active addresses got all the way up to around 583,000, the far left y-axis. Our active addresses got all the way up to nearly 600,000. Our transactions hit north of 1 million. What's interesting here is the fact that as these transactions were spiking, anytime you see a huge spike like this, so we saw this go from, 150,000 active addresses all the way up to 583,000 active addresses. So nearly 600K active addresses on the network in relatively a short amount of time. So this happened from October to January, to the middle of January. And typically growth like that is not going to be sustainable. Then you saw the number of addresses using this network plummet. So we went from nearly 600K all the way down to here. So right at around 200K. During that time, you'll note that the bottom price occurred right here. It occurred at the end of December. So right here is when we hit that market cap low. We had a market cap at that time of $10 billion. So we came from $120 billion all the way down to 10 billion. And notice that after that, there's a spike in the number of active addresses, and then your active addresses drops precipitously. So going all the way down to nearly 200K. So right before that, we were sitting at around 300K active addresses. And very likely, a good portion of this drop in active addresses was people capitulating right at the worst time, because what happened right when we hit this bottom? Well, we started up. It's by definition a bottom, right? But I think this perfectly encapsulates what happens in a market cycle. You see the number of individuals using it drop off right at the worst time. So these people, many of them likely capitulated. It's why we got this precipitous drop. And then the market turns around right when this hits a rock bottom. So there's panic as we're, going from a market cap of around 20 billion. It loses 50% of its value in, we go from November 12th to December 10th. So in less than a month, Ethereum, which has already got absolutely annihilated, going from 120 billion all the way down to 20 billion, loses another 50% of its value. People are buying here thinking it can't get any worse than this. And sure enough, it goes down another 50% in less than 30 days. Okay. But then it picks up, and notice that a lot of those people who panic sold probably bought back in here. They're, saying to themselves, oh, I sold at the worst time. And sure enough, it goes back up. And right when it peaks again, right when you get a crazy peak again, in a rather short amount of time, what happens? The market turns on them again. And that's how cryptocurrency works. It has a very interesting way of being cruel to new individuals coming into the market. When they come in, they're often punished for it. So, it's not for the faint of heart, quite frankly. So what we see then is over time, now we have a healthier increase in the number of active addresses. This is a more healthy market movement. We're seeing the market gain addresses, gain transactions over time. So we go from around 225,000 all the way up to our peak this cycle at around 700,000. I should quickly say that just for smoothing purposes, I'm using a moving average here, because if we were looking at simply day by day, it's all over the place. So I'm showing you 2-week moving averages here. But then we come back down, and now we're sitting right in this area. And this brings us to the discussion of where we're at right now and why we're seeing the negative price action that we're seeing. So notice that the number of transactions ever since November, ever since we hit this price peak, it has been on the decline. And notice that the November move was lower than the May move. So this sort of shows you that, the number of users on the network is declining, but it's a more healthy decline. So again, everything about the market this cycle is much healthier than it was in the last cycle. So while we still believe that the market is going to be at the whims of the general market, the stock market, whatever's happening in the economy, it's very likely that this market will still be at the whims of the general market. The market looks healthier. You're not seeing just this, we did have this plummet because naturally you're going to have speculative type investors coming in, like we saw 200K all the way up to nearly 600K active addresses. In this cycle, we didn't really have that. You did have a big spike, but it was a much smaller sort of speculative move. So we only went from, in a very short amount of time, we went from around 500 up to this 700. So the move was much healthier, as was the decline. Notice the decline here in July simply went back to our March level. It went back to our pretty much our March or maybe February 2021 level. So since this cycle has, went on and things have been bearish, we've still seen, even though there's been a decline, and that will naturally happen with declining markets, even with the decline, you're seeing that the market is hanging on much better than it did in the last cycle. Okay. So we're slowly losing users over time, but we're pretty much holding up nicely right at around this, on average, 450 up to around 500,000 active addresses. So that's what you want to see over time. And that shows health of a network. And that shows that it has a user base, because when things are bearish, when the market looks like crap, and yet you still have 500,000 users, that's nearly double, if not more, than you saw in the last market cycle during the more bearish stages of the market. Okay. So you can think of it as the user base of Ethereum has nearly doubled since that prior market cycle. All right. So that's going to be important, because if we look at Metcalfe's law, and I don't subscribe to Metcalfe's law perfectly as it's, as it's defined, in that the value of a network is equal to the users squared. But I do think that there is a nonlinear relationship between the number of users on a network and the value of the network. So the more individuals you have using it, each new user on that network is more valuable than the prior one. So that's why it has a network effect. All right. Now, that's an oversimplification of the issue, and we'll talk about this again in future episodes of this series. So this shows what I'm talking about here. This is Bitcoin over the number of active addresses. And you can see that while there's variation between market cycles, we can see that the value of Bitcoin, as it reaches new levels of active users, so individuals utilizing the network, as we reach these new levels higher and higher, it reaches to new values. So we'll actually increase the precision by which we're looking at this here. Okay. So, back in 2014, it was worth about 0.007 cents per active address. Then it got up to nearly 2 cents in 2018 or late in 2017. Then in this market cycle, we got as high as 8 cents per active address and are now trading at 4 cents per active address. So you can see here that when we were at, this stage of the cycle, back here in around 2018, during the bear market, we were at around 600,000 active users. We're looking over here now. So we were sitting at around 600,000 active addresses during this stage of the cycle. And notice that the value of Bitcoin during this time was anywhere between 1 cent down to around a half of a cent. Okay. So we're looking back in 2019. And we're at around 600,000 active addresses on average. Then if we come to this cycle, we haven't even doubled. We haven't doubled the active addresses. We're only at nearly 1 million active addresses now, somewhere between 800 up to 1 million. And yet the network, even in this bearish stage of the market, is worth 4 cents. So a increase in the active addresses by about 50% has led to a 4x increase in the value of the network. All right. And at peak, we saw the same thing. We were at this peak, we were sitting at around, less than 1 million active addresses. And on average, at the end of this cycle, we were somewhere between 1 up to around 1.2 million active addresses. And the value at peak went from 2 cents up to 8 cents. So you've seen, with very small increases in the number of active addresses, there has been a much larger increase in the value of the network. So what we have here is the Ethereum daily transacted volume in pink. This is going to be the value of US dollars transacted per day on the Ethereum network. Then you have the Ethereum market cap in blue divided by the total number of dollars transacted. finally, in this, I actually switched it from yellow to this orangish pink color. It's the market cap. That way you can see it better. And you can see that yet again, we saw that in 2018, this sort of peaks near the end of the cycle, it turns over, and then the market cap just plummets along with the daily transacted volume. So this shows how important it is to have, individuals not only trading, but trading high dollar amounts. So that increases the value of the network. So when you have more money flowing around in the network, it increases the value of the network. But what we have seen is the way that the Ethereum network is valued per dollar transacted on the network significantly increase. So we've seen this has went from, and over on the left, you can see from around 9K in the more bearish stages, actually down to around 2K in the more bearish stages of the market, all the way up to where we're sitting now, or where we peaked out at around 360K per dollar transacted. So the market cap was around 360K per dollar transacted on that network. Okay, so what we're seeing is basically that the market cap divided by the daily transacted volume, so the market cap divided by the total daily volume of the network, it's held up quite nicely. So we've had these peaks and spikes. So trough down here at around 73,000, and then peaking back up to around 300,000 here in March and April. So this value has held up quite nicely. And so this is going to be important to see if we can maintain this level. If we can maintain the value of the market cap per the transacted volume, because our transacted volume is decreasing, all right, but our market cap is decreased. So we're kind of maintaining right in that level. So what we're seeing is the market is continuing to value the network right at the level of the transacted value. This is falling, but you'll notice that the blue line, it's sticking up right around here. There have been some of these troughs here, but overall, it's sticking right at around this 200 to 300,000 market cap per transacted volume. And that's sort of indicating that, in spite of the fact that this is dropping, people are still willing to maintain this value sort of right at that level. So it will be interesting to see if the market continues to value the network at these kind of levels. So notice back here in 2018, even when the bear market started, the transacted volume stayed quite high. It stayed high. Much of this may have been people, sort of selling, trying to get out of the market, but it stayed high. And that means the market continued to value the network based on wherever the transacted volume was. All right. But then it started to get lower. We started to make lower highs and lower lows. And then that eventually led to a capitulation. In this cycle, we've seen, even dating back to May, the way that we're valuing the network per transacted dollar is higher. It's higher than it was in May. So it will be interesting to see if this trend can continue or if this will turn over. And notice what happens when it turns over. The price, or the market cap in this case, goes down. Okay. And we're seeing that here where the transacted volume is dropping, as is the market cap, but this valuation is staying the same. So what this means is if this transacted volume continues to fall and this blue line starts to fall, you'll see the price drop faster than the transacted volume. So that's what you don't want to see. But like we said, there's evidence to suggest that the network is behaving in a healthier manner than it did in the prior market cycle. So ultimately, it's going to be contingent on this remaining sort of at the same levels. We're seeing the active addresses stick around even back to where we were in January. In the bullish stages of the market, we're seeing the transaction volume stay up at those levels. We're seeing, everything pretty much staying up those levels. The only thing that's higher is the market cap. Okay, so people are now valuing the Ethereum market cap higher than they were back in January, in spite of some of the other metrics being the same. So it's ultimately going to come down to, will we continue to value the Ethereum market cap higher per active address than we did in January, or will that eventually turn over and, we start to head to lower prices? So that's going to be the thing to watch. And that's going to be it for this one, guys. It's a long video. There's a lot of things to talk about. There's a lot of nuances in this topic, but we're going to keep building on this. This is the most basic of all of the possible ways that we can look at this. But remember, like I said in the beginning, basic doesn't mean that it doesn't have value. In fact, I would say that this likely has more value than many other metrics. It's just we're going to add nuance into it and start looking at other ways that we can start valuing networks in order to identify perhaps new niches in the market, perhaps new, layer ones or other ways to start valuing other layer ones. And we'll do all of this in order to determine which networks may hold the most value going forward as we're moving into these more bear stages of the market, because ultimately that's going to be where investors are going to find huge gains going into the next segment of the market cycle. It's going to be by identifying value before other individuals can identify it. So that's it for this one, guys. Until next time, as usual, see you.